Thank you very much for joining us today, guys. My name is Rayhan. I'm the managing partner of an accounting firm called Alpha Pro Partners. We specialize in accounting and also implementing Zero for small and medium-sized businesses. I'm very pleased to be joined by Salman Rafiq. He is the managing partner of an accounting firm called JRB. They are our go-to kind of firm when we have something technical that needs solving, such as complicated audits, tax, AML compliance, as well as ESR. So ESR obviously has gone off the radar for quite a few people, especially as corporation tax is coming up. But we felt that it would be good to have a refresher just to ensure that people keep it on top of their mind, because it's still quite an important compliance for many companies to adhere to. And if not, obviously there are penalties that can occur. We are recording this session, so we'll be sharing the recording afterwards. Salman will obviously start with his presentation for about 20 minutes, half an hour, and then we'll have Q&A at the end for any specific questions that you may have. So without further ado, Salman, I leave the floor to you.
Thank you, Rehan. Good morning, everyone. Thank you for joining us today. And thank you, Rehan and his team for arranging this session. ESR, like Rehan has mentioned, is one of the key topics, and a lot of companies would have to do the compliance by the end of June this year and towards the end of this year as well. That'll be for the reportings. So the purpose of the session, I think, is to briefly take you through the key compliances requirement for ESR, what this is about, what companies need to do as the do's and don'ts when they do their reporting, their filing, as well as what are the key obligations in terms of ESR tests, which is something called ESR tests, which companies need to perform in terms of ensuring that they are compliant to the requirements. Before taking you through the entire session, I'll just give you a quick brief about what we are, who we are, and then what we do. We're a firm of chartered accountants here in the UAE. We basically take care of audits, assurance requirements, tax compliances, and compliance requirements in terms of UBOs and other compliance requirements in the UAE. We also provide advisory and assurance services. So let's run through quickly on what exactly are we talking about today. We'll give you a quick brief about, like I said, it's kind of a refresher course, basically on the overall requirements of ESR. We're not going to go into details about the industry specifics, because there are certain industries like insurance and banking, which are quite complicated when it comes to ESR reporting and filing. So we're just going to give you a brief about some of the key industries, which are basically most businesses would be impacted by. So we'll talk about those businesses like distribution centers and services, and maybe some of the other businesses like holding companies. Of course, we'll keep the floor open for you to have a discussion at the end of the session. So to look at briefly what the ESR requirements are all about, we need to understand what exactly, why this has come to the UAE, and what are our key obligations concerning it. UAE has responded to one of the key, I would say, blacklisting from the European Union side in terms of jurisdictions which are non-cooperative, for tax jurisdictions which are non-cooperative from EU list. What that means is basically there are certain businesses, especially multinational companies, which are opening companies in jurisdictions which have lower tax rates or even virtually no tax, like UAE. The businesses were opened here in the UAE and other places like UAE, and most profits were shifted artificially by the companies to such regimes. What that does to those countries is where the actual businesses have happened is the tax is virtually not paid in those countries at all. So it's one way of avoiding the taxation, and it has become that norm in the multinationals or multi-jurisdiction businesses to do this. So to prevent such harmful practices for such countries, this regulation has come in place to prevent companies to shift profits artificially to such regimes. So that's the overview of what exactly we are looking for. And when you look at ESR, you can also look at it from the angle which companies will be impacted most will be those companies which are foreign companies and they are having businesses in the UAE, be it as a subsidiaries or maybe branch offices. So those are the companies which are most impacted and where the key concentration of ESR lies. In terms of the obligations, what exactly businesses need to do to prevent such practices is to ensure there's a criteria which is given by something called economic substance test, which every company needs to perform. And There are three-pronged approach to it. Basically, businesses needs to ensure that the key economic generating activities are being performed in the UAE. The businesses are being managed and directed from the UAE, and there is an adequacy of infrastructure. What that means is adequate employees, adequate assets, and expenses have been incurred in the UAE to ensure that the key component of the businesses or the key economic activities have been generated from the UAE. And the companies and the businesses in the UAE are not just being used as a vehicle to park and post profits in order to avoid tax from other jurisdictions. One of the key things to note is initially ESR was being managed by Ministry of Finance, but then later on, of course, it's still being managed by Ministry of Finance, but then the administrative jurisdiction lies with the FTA, with the Federal Tax Authority. And that's a change which has happened over a period of time. Relevant activities. Let's look at which businesses will be impacted from the ESR requirements. Like I said, the key idea is businesses which are multinational, multi-jurisdiction, and they have offices and companies in the UAE. Also, the authorities have defined key businesses, which are called relevant businesses, relevant activities. If you are performing, or if your company is performing these activities, you will fall under the jurisdiction of ESR. One thing to note is the activities are not driven from your legal licensing activity. The approach needs to be a principal approach. It's a substance over form approach rather than just following a licensing activity. Of course, if you're doing an activity which is beyond your licensing activity, that's another issue, that's another licensing matter, which of course you need to address. But then businesses would have to take an overall principle-based approach while they're looking at relevant activities. To quickly review, what are the relevant activities? One of them is businesses which are in banking and insurance sector. Investment funds management. One thing to note is it's not business, it's not investment funds. Usually investment funds are the companies which just hold the assets, and those are being managed by other companies which are called fund management. And the most incomes are generated in investment management companies rather than investment funds, which just takes the yield at the end of the year. So these are the investment management companies we're talking about, not the investment funds. Shipping companies, if you are doing a shipping activity, be it for the purpose of cargo or for the purpose of passengers, you fall under this category. Intellectual property, which is a very interesting area because a lot of businesses have been opened just to hold some sort of IP, be it a brand or be it an acquired IP from the IT or other sectors, to basically record or let's say have transactions in the UAE. For intellectual properties, there are further additional criteria which could be quite complicated when the businesses implement their ESR or interpret the requirements for intellectual properties. I'm not going to go into detail, but then overall, all IPs businesses fall under this category. Finance lease activities. Finance lease activities are not only restricted to the asset base, but they are also extended to basically financing activities. If the companies are lending money to their related parties or third parties, those are also covered in finance lease activities. Headquarters and holding companies are virtually more or less the same, but then these are the different categories. I think most companies which are established in the free zones, they fall under these two categories. And the last category, which is distribution and service center. Distribution and service center is quite interesting because the definition of distribution and service center is quite wide. And we'll look at it in a detailed manner in the next slides because this is a key area, and then we'll have a more detail on this. But virtually almost all businesses trading of goods or doing services-based businesses, they can fall under this category, depending on where their origin is from, if they're part of a multinational group, or if they are part of a holding company or subsidiary of a foreign group. For the purpose of ESR test and ESR reporting, there are certain exemptions. So what that means is companies would have to, which are falling under these relevant activities, they would have to do two key principles they would have to follow. I'll just take you back on the previous slides. What exactly are the obligations from the companies to do, what exactly they need to do in terms of ensuring their compliance? One is it's just to look at performing something called ESR assessment. if you really fall under one of these categories. Like I said, the approach has to be principle-based and not just what's on your license, so that it could become quite complicated when you implement it in a practical scenario. One is to perform your ESR assessment if you fall in one of these categories. Second step would be to file a notification. If you fall under the category, you need to file a notification. The notifications are filed to Ministry of Finance. There's an online portal, and businesses can do reporting as well as notification on the Ministry of Finance online portal. Next step you would have to look at is once you file a notification, and if you've concluded that you fall under the category, and then you are not one of the exempt businesses, you would have to do an ESR test, which is Economic Substance Test, which is on your screen right now, just to look at 3 key elements: whether the substance of the transactions fall in the UAE, and you have enough infrastructure and let's say assets, employees, and expenses to ensure that the relevant activities you're performing, they have been commensurated to the underlying expenditure and underlying infrastructure, to ensure the substances in UAE rather than any other country. Once the ESR test has been performed, businesses would have to do a filing for the businesses. That's a final step, and we'll see the key details on these areas as well. Let's move on. Let's look at what are the exempt businesses. If you are one of the businesses that are performing relevant activities, and you may also be falling under one of the categories that is determined as exempt businesses, what businesses need to do is they still would have to do a notification for them being, falling under the jurisdiction of ESR. However, exempt businesses would not have to do the reporting as well as perform an ESR test. That's a key difference between exempt businesses as well as the businesses in general, which are falling under relevant activities. So the key businesses which are exempt from performing an ESR test and reporting are investment funds, which I've discussed earlier. One of them is investment funds. Other businesses would be businesses which are taxed outside UAE, for example, foreign branches, and for the purpose of tax, if they are being taxed outside UAE, then they are exempt from filing ESR reporting. There are certain other businesses, like businesses which are wholly owned by UAE nationals as well as UAE residents. Resident means somebody who is having a UAE visa, as well as they would have to substantiate that they are spending time in the UAE. Not having just a residency visa perhaps wouldn't suffice in this case. And those businesses, if they are not part of multinational group, as well as they only conduct business in the UAE. If you are conducting business outside UAE, and even if the business is owned by a UAE resident, you cannot claim an exemption. So these are the key exemptions which are available for ESR relevant activities. Another key definition to look at is a holding company definition, because certain companies here which are being formed as holding companies, they also perform activities which can be determined as the non-holding activities. For example, a holding company can only perform one activity, that is holding shares in equities in other companies, and in return getting dividends or capital gains at the end of the disposal or liquidation of the assets. If you are performing any other activities apart from holding just the shares, for example, some sort of interest or lending of money to other subsidiaries, or lending of money to other related parties or third parties, then this activity will take you out of the definition of a holding company. So there is a criteria available, of course, given by the authority, what needs to be done in such cases. Of course, one is you're in violation of your licensing rights, as well as you're also falling under some other categories. You may fall under some sort of business center or distribution and business center activity, or you may be categorized as a leasing business if you are doing any other activity apart from your holding company key activity. There are certain conditions, like I said, for the intellectual property business. I'm not going to go into a lot of details, but the key idea is if you are holding an intellectual property which is not being developed by your company in the UAE, and it's acquired from some related parties or related connected person from outside UAE, and those IPs are being used to generate income from outside UAE, then you fall under the category of high risk IP category. And there is an additional requirement, there is an additional disclosures which needs to be done in such cases. Like I said, the requirements are quite wide and complicated, so we're not going to talk about it for the, in the interest of time in this session. I have a brief of decision chart basically for the ESR purposes in front of me, just to quickly look at how to make a decision if my company falls under the relevant category and what are the key obligations. It's just a summary of it. So just let's have a quick look at it so that we recap what the requirements are. If you are an incorporated entity in the UAE, you may fall under the category or you may fall under the jurisdiction. Otherwise, you're not supposed to do anything about this requirements. ESR regulations do not apply to you. The next thing is to look at is just if you fall under the relevant category. If you do not fall under in any relevant category, you do not need to do anything. You also need, next step would be to look at it if you are an exempt business. If you are an exempt business, you need not to have any sort of ESR, like I said, reporting, and do not have to perform an ESR test, but you still have to do a notification for the ESR and claim your exemption. There is a process for claiming his exemption, and then you would have to follow that process. The next step would be just to look at if you are earning any income from your relevant activity. If you're not earning any income from the relevant activity, you do not have to do an ESR test, as well as reporting would not be required. However, you would have to give a declaration at the end of the year end that you do not have any sort of relevant income from the relevant activity. Holding company, if you are a holding company, you would have to look at things, like I said, in a different way. You would have to see if you are adhering to your licensing requirements. That's the key item here. If you are not fulfilling your licensing requirement and you're doing an activity which is beyond your licensing, which is holding just the shares in companies, then you would have to submit further disclosures to the authorities, perhaps amending your activities. And you may also be considered as not meeting the substance criteria for the ESR purpose, and it may lead to penalties and further complications in your business. If you are falling under one of the categories of IP business, of course, IP business, automatically you would have to do a test of whether you fall under a high risk IP category. And if you do not fall under high risk IP category, the criteria remains quite simple, which is a three-step approach, looking at whether your business is managed in the UAE, looking at whether your business has enough infrastructure to commensurate to the income which you're earning from relevant activities, that is physical assets, maybe the cash in the business, the deposits, receivables, the employees in the business, and physical assets in the business. So you would have to look at overall how much money or how much substance you have in the UAE to prove that this income can be justified. Finally, the core income generating activities have to be in the UAE to ensure that the entire ESR test can be met. High risk category IPs, like I said, the requirements are quite complicated and we're not going to go into details. But yes, if you do fall in this category, if you hold an IP license which is not designed, which is not produced in the UAE, and you are earning income from that IP from outside UAE, you should look at that very carefully and do a complete thorough check on it, whether you fall under this category and what are your obligations concerning that. Let's quickly look at distribution and service center business, because like I said, most businesses in the UAE may fall under this category, because UAE being one of the hubs for trading as well as for services, most businesses can fall under this category. So we'll have a quick look at it, what the distribution and service business decision can look like. If you are part of a multinational group, like I said at the beginning, when you look at your business, you would have to look at very carefully from the standpoint whether you have any foreign origin. If you are part of one of the multinational group company, then you certainly qualify to look at the overall transaction of your business to make sure that whether you fall under the category of any of the service center business. If you are not part of multinational group, you are certainly a low risk business. However, you cannot rule out completely that you do not fall under any of the relevant activity business. Key thing to note here is if you're doing a transaction-based business, which is goods, sales of goods, or you're doing a service-based business, If you're doing a sales of goods, you are most likely to fall under the category of distribution service center business. If those goods are further distributed or sold within or outside UAE, you fall under this category. And if you do not do this, of course, then that's out of the question. If you are one of the companies that is doing a service-based business for the foreign companies, you have to look at two things carefully. If the nature of the business, you would have to look at it. If your business is assuming the role of entire company and running sort of a management business here in the UAE, oftentimes people form companies here in the UAE, and then when a lot of businesses from outside UAE are also being managed from the UAE, it's basically connecting that as a management role. If your service-based business is assuming a management role, then you fall under the category of headquarter rather than just a service center. On the face of it, it might look like a service center business, but it may be categorized as a head office business. However, if it's just a simple transaction-based, service-based business, if you're doing consulting services or any other sort of services, you will be classified as distribution and service center business. Another thing to note is if your business is doing some sort of lending activities, cash lending activities to your related parties or to third parties, which is anyways, depending on your licensing jurisdiction, it's a violation for any trading or service business to have a cash lending business to third parties. But however, within the group, that's generally allowed. But then if you fall into a lending-based business, then you might be categorized as a leasing business rather than just a service center and distribution center. So why the categories are important, why the categorization is important is because depending on what business category or depending on what relevant activity you choose, your requirements and your reporting obligations vary based on that. So for you to be able to know, what requirements to apply or how you fall under this, how can you comply with the overall requirements, it's important to understand your business category. So in terms of your reporting requirements, ESR reporting and notifications, the notifications are to be done 6 months after the year end of your financial year end, and ESR reporting is done 12 months after the end of your financial year. For example, if your financial year is 31st December 2021, your ESR notification is due by 30th June 2022, and subsequently your reporting will be done by 31st December 2022. So a year after your financial year, depending on what your year end is, your financial year end is, which is usually driven from your audited financial statements as well as your memorandums and articles of associations. So you would have to take count of which financial year you fall in, and then accordingly just add 6 months for the notification and 12 months for the reporting requirements. Let's have a quick look at the administrative penalties. Businesses who fail to do a notification would be penalized 20,000 dirhams for failure to do a notification. Similarly, if you fail to do a filing which is a reporting for the ESR, the penalty for that is 50,000. Of course, if you do not do a reporting and your obligation is to report on a particular date, on 12 months after the financial year, you would also be deemed to fail the test of ESR. That's just an underlying assumption. Another important thing to understand is what sort of information you need to give to the authorities. If you are giving any information deliberately or a gross error to the authorities and the incorrect information is filed, you may be subject to 50,000 dirhams of penalty. Of course, there is an appeal process available. You can file an appeal. However, it's the onus of filing a correct information is on you. So businesses would have to do that, would have to prove that they have done their due diligence, that they've done everything they can to make sure that they file a proper information. So businesses would have to do a very careful analysis of what sort of information they are filing with the authorities. Another thing to look at is, for example, if you're filing the notification, you're filing the reporting, however, your actual substance of the business, if you fail the ESR test, what happens then? If the authorities determine that you have failed the ESR test, there's a penalty of 50,000 in the first year. And if you fail it, of course, there'll be a subsequent plan for how you can improve your ESR. And if you fail again in the subsequent year, the penalty can go to 400,000 dirhams. So there are heavy penalties for failing the test as well as failing on your obligations for reporting. In terms of looking at some of the key challenges, when you look at the businesses here in the UAE, certain things are quite principle-based. Principle-based, of course, it has its advantages, but there are some disadvantages to that as well, because businesses would have to do their own interpretation of a lot of things. So this is where the key challenges come from. And let's look at the key challenges which businesses are going to face in terms of looking at the ESR, adequacy of ESR tests or adequacy of ESR. One of the key elements is your employees, because a lot of businesses which are such that they have holding companies or businesses, distribution service centers in the UAE may not have full-time employees or may have very little full-time employees, and then some of the services activities have been outsourced. So looking at the calculation, how you need to calculate your employees, whether you need to include the directors and the shareholders if they are involved in the core income generating activities. So that's a key challenge for businesses, and businesses will have to look at it carefully. Another thing would be managing the business. How would you define whether the businesses have been managed from the UAE? One of the key criteria which the authorities have put forth is the board meetings and the decision-making process. So businesses would have to look at the element that they perform all their board meetings, that they really hold their board meetings, because a lot of businesses maybe currently they do not hold any board meetings and the business just goes as usual if they do not have a corporate structure. So that's another key item which you need to look at. Another thing, like I mentioned, if most of the companies or a lot of companies that have been outsourcing some of the either the staffing activities or maybe the key, let's say bookkeeping outsourcing, and let's say maybe some of the secretarial services they've been outsourced to companies in the UAE. So they would have to also look at the ESR criteria for those companies to whom they are outsourcing. The companies will have to also look at it carefully. If they are outsourcing to companies which have an economic substance in the UAE, for example, if you are outsourcing to a company which is outside UAE, but of course, from the standpoint of ESR tests, that would create a big issue for you. Let's quickly look at some of the key items which we need to take care when we do ESR notification. One of the key items to look at is, of course, I'm not going to go into a lot of details how the notification is designed, because, of course, notification details are available on Ministry of Finance's website and their portal. But we'll just quickly look at some of the answers which perhaps you need to have prior to doing a notification. These are the questions which we have basically picked up as important ones, and you can pick it up any other question which you have in the Q&A session. One of the things which we need to look at is, while you're filing a notification, whether your company fall under the definition of relevant activities. Like I said, you would have to do a thorough analysis, not based only on your licensing activity, but also what exactly you do, where the shareholders are from, whether you're falling in any sort of holding company definition, any sort of multinational group definition. If you fall under that, then you may have to look at your overall structure again to ensure that the interpretation or the conclusion which you're reaching at is actually the correct one. Another question which people often ask is, if we have just started doing an activity towards the end of the year, or somewhere during the year, whether we still fall under this category. Yeah, the answer is yes. If you have just started the relevant activity before the end of the year, you would still be obligated to file a notification 6 months from the financial year. Another question people ask is whether the notification for multiple, for example, if a single shareholder holds multiple companies in the UAE, whether they can file a single notification. The answer is if those companies are, the legal structure of the companies are independent companies, then no, you would have to file notification for each independent license, each independent company separately. However, if those are the branches of the same company, then the branches can be combined under one single company. The main company will be filing the notification, including all its branches. How to file a notification, that's on the ESR Ministry of Finance portal. Whether the dormant companies or the companies under liquidation, what are their obligations? If you still have a license, and if the company, whether the company is dormant or whether the company is under liquidation, and if you still have a license and the company's license is not canceled yet, then you would still be obliged, they will still be required to file a notification. The penalty for the giving an incorrect information, like I mentioned earlier, is 50,000 dirhams. Let's look at some of the key items which we need to see while we report for your businesses. Key items people ask is, when you look at, some of the businesses like exempt status. So while you will be doing a notification, you would be asked a question whether you fall under an exempt category. So businesses will have to keep all the documentation in place to ensure that whatever has been asked at the time, you can file that and you can claim your exempt status. Of course, the information will be evaluated by the authorities, and further questions have been or information is required, they will ask you at the time, but then of course not at the time of the notification. You would also need to understand if you are a relevant business, what sort of relevant activity you're doing. Like I mentioned earlier, you would have to decide for each business, would have to decide which category they're most likely to fall in, or what is more relevant for them, and then file a notification for the business relevant activity accordingly. ESR reporting, these are some of the key questions which related to the ESR reporting, but we'll also look at, before you're doing a reporting, what sort of information you should have in hand to make sure that you can successfully file a reporting. There are some requirements for specific businesses. We're not going to talk about that, but then key requirements for general businesses, and these are the general requirements for most, which is applicable to most businesses. Of course, while you're doing the reporting, you need to keep in mind that while this reporting has been done, the authorities are going to ask you for the total income of your business, your expenditure, and your total assets, as well as your employees' details. So you should have these details readily available with you before you start the filing. Again, these are the same questions, whether the notification cannot be done for multiple licenses. Same way, reporting also cannot be done. And same rule applies for the branches. If you can file a composite ESR report for all your companies all branches under one company. You can file a reporting as a composite report. These are almost the same questions which we looked at during the notification. So let's move on to the next thing, which is key requirements before you file a notification. What sort of information and documentation you need to have. The authorities are also going to ask you about your audited financial statements. If you have an audited financial statements, most likely the businesses would have to submit a standalone financial statements, and certain businesses may also submit a consolidated financial statements. What that means is, if you're part of a group and if you have a group entity, holding company, preparing a consolidated financial statements, you may be required to do a consolidated financial statements. However, standalone financial statements, what that means is the financial statements of the entity, single financial statements of the entity which you are reporting for would also be required. In terms of those numbers are required for you to file with the authorities. The key numbers which are required for the filing is basically looking at your total revenue. Of course, the revenue has to be decided. It needs to be interpreted. What is construed as a total revenue? Generally, other incomes like dividend incomes, income from one-off sales of assets, of investments. These are not construed as total revenue. So the total revenue generally is a revenue which comes at the top of your income statements or of the audited financial statements. That's generally the total revenue of the company. Of course, your accounting profit and net book value of tangible assets. An important thing to understand is net book value of tangible assets. There are multiple definitions for that. Certain businesses would have to interpret it in a different way. For example, an investment fund would have to take all your assets, and assets under management would have to be also considered as a book value of the assets, tangible assets. What's excluded from tangible assets is generally the intangible assets, which are generally IP rights and let's say goodwill and assets like that are generally excluded from the tangible assets. We would also have to look at it because one of the first ESR reporting requirement and first filing and notification has been done in previous year. So, but generally, some businesses may have to do a change in the notification depending on how they've interpreted the businesses previously, and there are any changes during the year. They might decide to file the notification as well as reporting in a different category depending on the nature of the business. So this option is available. However, if you are giving a different information from your ESR notification and reporting, you would have to give an explanation of that. The option is available. However, you would have to give an explanation or perhaps a reconciliation between the two activities, why there is a change between the notification as well as the filing requirements. Another thing which I mentioned earlier is outsourcing arrangements. Businesses would have to give a declaration that they have a clear visibility on their outsourced partners, be it a related parties or be it a third-party outsourced providers. They would have to give a declaration that they have a clear supervision over the activities of their outsourced partners, in particular to your relevant activities. Your outsourcing is related to your relevant activity, then you would have to do a clear assessment of what sort of time your outsourced partner is spending on your relevant activity and keep a clear track of it, so that if these questions have been asked by the authorities, it can be justified that this is the time and effort that has been put in place in terms of conducting your relevant activities. So these are the key items. Somewhere we have already covered these. I'm not going to go into a lot of details, but then I think we have mostly covered these requirements, and then we can open the floor for questions. Rehan?
Salman, thank you very much for your insights into ESR. It's very, very beneficial and it was very useful. I think you've covered a lot in 45 minutes, so it doesn't really leave much for Q&A. But if there's anyone who has any specific questions, feel free to ask. So there's a few questions that have come up already, so I'll read them out and then you can answer them. If anyone has any questions, feel free to put it into the Q&A bar. As we don't have much time, normally we allow people to ask the questions, but I think we've only got 15 minutes, so we'll probably just start going through them and then we'll wrap up. So the first one is, do exempt businesses need to notify that they are exempt from ESR filing? I think you've covered that, but do you want to just...
Yes, certainly. Like I said, businesses would have to do an assessment of it. If they fall under the exempt category, they have to file and claim for an exemption. However, they would still be required to do a notification. And this exemption is basically claimed while you're doing a notification. So yeah, the answer is yes.
Okay, thank you very much. Okay, I've got a question from an anonymous attendee. Do exempt businesses need to notify MOF that they are exempt from it? We've already just answered that. Okay, there's another one from our good friend Waleed. If I have a brand which is active in the market, how is it valued in the tax process by the tax due time?
So perhaps if I'm not quite sure what's the question here, but then if I may try to answer this one, it's not, the ESR is not going to be concerned about your valuation as such. However, the key item to look at is the income generating activities. If you are, perhaps I can just give a little brief on what businesses are covered under high risk IP. If your question is related to that, then generally businesses which are, the IPs have been acquired from outside UAE. Now, for example, if a brand which has established a company here in the UAE, and the purpose of the brand is to establish a company in free zone, and then perhaps because these brands would already have branches or perhaps the offices outside UAE, which they have franchise. So if your question is related to franchising, then most businesses fall under the category of ESR, because the branches, usually the IPs of brands, how that works is that just having a brand in the UAE and then franchising that brand across various jurisdictions. So what essentially that does is that just yields profits into the UAE and then perhaps avoiding tax at other regimes. So you would fall under the category of an IP business. However, you would have to look at it also whether you fall under the high risk category, because if you fall under the high risk category, most likely the scenario which I explained it to you would fall under the high risk category, because generally brands are developed outside UAE, which have been lent or which have been taken as a license here in the UAE, and then using UAE as a hub to basically account for profits.
That's quite useful. Thank you very much. Are there any more questions? I haven't seen anything else come through yet. I think you've been very comprehensive in your webinar presentation, Salman. There's another one. If I need to submit ESR notification and there is nothing to report, the question is, should I submit the ESR report?
So there are two scenarios where you would not have nothing to report actually. If you have reported, if you file a notification, then you certainly want the relevant business. One of the condition is if you have filed an exemption, then yes, you do not have to do a reporting. The other condition is if you do not have any relevant income, you may not have to do a reporting. However, you would have to file a reporting application and say that, yes, we do not have any relevant, any income from the relevant activities. So you would have to still file it, but then you do not have to go through the entire process.
Okay, no, that's fine. I think there's no more questions, so I think we'll wrap it up. What's the easiest way? So you got your contact details on your slide, right? So what's the easiest way that people can contact you if they have more questions?
So the easiest way is to just write it over an email,
okay,
perhaps, or maybe, yeah, I think that will be the best way to reach out.
And the email is there, info@jrb.ae, correct?
That's correct.
Okay, cool. I think that's it for today. Thank you very much, Salman, for your insights and your expertise. I think it was a very useful webinar. A lot of people are mentioning that it's been quite informative. I think if anyone wants to reach out direct to Salman, feel free to reach out. He's more than happy to help you with your specific cases. Is there any closing thoughts from your side there, Salman, that you want to share?
No, I believe the key item is to just review your overall compliances and prepare yourself before the question have been asked from the authorities. One thing I've noticed is that businesses, without understanding the key components and requirements, especially during last year, almost every business tried to file the notification for not before understanding whether it applies to them or not. And of course, when you do that, you trigger that requirement for yourself, and then you may be categorized as one of the businesses that is doing the relevant activities. However, you are not. So you need to understand that whether you really fall under this category. And another thing, important item is just to look at certain businesses which have previously not filed the notification and they have been given penalties. So there is a process available for basically contesting the penalties. Of course, it's an administrative penalty from the authorities. Another key item to note is when businesses have been given a fine, they try to file an appeal without giving proper justification or grounds on why they are contesting it. Yeah. So if an important thing to note is once your application have been denied once, the only option remaining for you is to go to TDRC, that is the Dispute Resolution Center. You cannot file another application for appeal, or you cannot file another appeal unless you open basically dispute with the tax authorities, which is generally very tedious and very long process, and it's a very costly process. You would have to go through a lawyer, and there is a process involved to it. So generally, the amount involved, which is a 20K, it basically does not make sense for you to go to TDRC and then try to fight a claim against it. So my advice would be, if you have been given a penalty, sit back and just understand why this penalty have been given. And then if you want to contest it, just file a case. Once you have only one opportunity to file a proper justification why you're contesting it. So have a look at it very carefully.
Well, no, thank you very much for your closing thoughts, Salman. This webinar will obviously be shared on YouTube. And like I said, feel free to contact Salman if you have any questions or queries. Salman, thank you very much for your time. Thank you very much, everyone, for attending. And we'll share the link once it's ready. Take care, guys.
Thank you, everyone.
Thanks. Bye.